Dividend stocks have been a very hot topic as of recently. With the ups, with the downs, with the firing and furloughs, with the market going all over the place, and people just being overall pretty nervous with this whole new situation, it has been very important to pay attention to what companies are performing well, which ones aren't, and which ones are sitting somewhere in the middle. I genuinely believe that as time goes on and as the years do pass, the companies that perform the best over this year are going to be the ones that are going to be considered a little bit more safe. I think companies are, going to need to set up some type of routine or be much more prepared for a situation like this than they were this year, but the companies who were prepared just in case for a situation like this are definitely going to be the ones that are considered to be more safe. And so with that being said, we are going to be going over dividend stocks today, and the stock that I believe is one of the absolute best on earth. Now, in short, a dividend stock is a stock in which pays a certain amount of its revenue out to its investors, maybe every quarter, every month, maybe twice a year or once a year, and simply for the fact that they just want to be able to give back to the investors a little bit. A lot of these can range from maybe 2 to 3% all the way up to 10%, and it all just depends on the company and what certain industry that it's in. But we won't be going into a full breakdown of what a dividend stock is, but in today's video we will be going over the dividend stock Store Capital. Now, if you have been in my channel for a little while now, you know that this is one of my absolute favorite stocks. I actually have over $6,000 invested into them. I have about 250 shares, and it has just been absolutely phenomenal for me. And I didn't want to be stingy. I didn't want to just hold it up a little bit. I wanted to make sure that as many people as I could tell about it, that I do, because this is a stock that I absolutely believe is going to do basically amazing over the next couple months, and especially in the long term as a dividend stock and as a growth stock. Now, these types of videos are new to my channel. I don't usually do a whole video based around one stock, so if you do want to maybe a little series around dividend stocks, definitely let me know down below. I can do a little analysis and focus my videos specifically on dividend stocks. So if you are interested in that or anything pretty similar to it, definitely let me know down in the comment section. And if you do find this video useful, if you do want to look into Store Capital even more after you do finish this video, you can let me know, and you can show your support by smashing that like button and subscribing if you are new to the channel. But with that being said, let's go ahead, let's jump straight into it, and let's give Store Capital a look. So to get us started, Store Capital is a REIT. A REIT is a REIT, or a real estate investment trust. Basically, this is a company that will take the money that its investors invest and then reinvest that into properties. So you're basically a landlord, just without all the hassle of actually owning the houses. You invest your money into them, and then they use that money to go ahead and buy all these different properties. These properties can be commercial. A lot of them are single tenant, and it kind of just depends on what exactly they're trying to grow for their own portfolio. So it's basically like you're investing into a property portfolio. So Store Capital stands for single tenant operational real estate, and what they do is they invest their money into different branches or industries that they find to be pretty suitable to go into the future. Now, what I mean by that is they know that the technological revolution is on its way. A lot of things are changing, and they are basically setting themselves up for the future in which industries that aren't going to really be affected by this new revolution of technology. They invest their money specifically into places like daycares or fitness centers, or all types of things that can't really be replaced by the touch of a button or the click of a phone. 17% of Store Capital's holdings in its portfolio of properties are going to be metal fabricators and food processors. A few businesses in which pay rental income to Store Capital are going to be car retailers, food processors, lumber retailers, farm supplies, car dealerships, daycares, movie theaters. It goes on and on. They have a lot of restaurants as well. It honestly goes on, and they are very diversified, but the fact that they are focused on simply investing their money into businesses that they believe to do very well in the future and not dying businesses makes a lot of sense to me, and I truly believe that that's what kind of makes them unique from a lot of other REITs. So it definitely can be something to look forward to in the future, understanding that they are setting themselves up to be very safe going into the future. They're not investing all their money, and they're not getting rental income from a lot of places that may be on a year lease. A lot of these big car dealerships and car repair shops, lumber retailers, they pay out their, rental income, and they sign contracts for 5 to 10 to 20 years. And the fact that that just gives them some type of consistency and safety is a very, very good sign for a dividend investor like me, because I don't want to invest my money into a dividend stock that I believe might not pay dividends for very long, because at that point, there's really no point. Because I want to invest my money into a stock that's going to pay me back so much money over time that it starts to compound and pays me back loads and loads of money simply for owning that stock. And so the fact that they're preparing themselves to, just continue to do amazing things into the future is definitely one of the best aspects of this entire stock. Now, one thing about the stock, and the reason that it has dropped a lot over the course of the last year, the reason that they are still down about 24% of the year, is that 1/3 of their total holdings were severely impacted by this pandemic. Now, in a broad sense, only 1/3 of their business being impacted by the business is not that bad at all. But at the same time, when 33% of your business is struggling, of course, that's going to imply that your business is struggling in general. But it is nice to see that it's not the entire company, or it's not the entire industry that they are invested in, or if they were invested into one industry and that whole thing tanked, it is kind of nice to see that since they are so well diversified, that it didn't just completely consume their entire company. Now, 3 examples that were really affected by this pandemic were like family daycare centers, restaurants, family entertainment hubs, movie theaters, so on and so forth. They have been going through it a lot, and as we all know that during this pandemic, a lot of those did close down, and the reason that that negatively affects store capital is because their revenue is totally dependent on rental income. Now, what this does mean as an investor is that if they are receiving less revenue, they are going to be, in theory, paying out less of a dividend. But one good thing about store capital is that they were so well prepared for a situation like this that they did hold on to a lot of cash, and the fact that a REIT is able to hold on to a lot of cash, considering that they are mandated to pay out 90% of total income, is a very good sign. That means that store capital's management team is absolutely phenomenal. They're really well put together and they know what they're doing. We don't have to question whether this is a stock that might do well in the future. No, with the management team and the output and the things that they have done over the last couple of years, the way that they have performed in a market that eats some companies up from the inside out is just absolutely amazing. And it gives me so much hope and so much joy as an investor knowing that this is a stock that I truly believe is going to do phenomenal over the next 10, 20, and 30 years to come. In late April, 35% of stores' properties were closed. That means over 35% of the businesses that pay them rental income were not paying rental income. They had no way of making money simply for the fact that they were not open. Now, one amazing thing about that is though, since they do handpick out each company that they let pay rental income to them and operate in their property, is the fact that the majority of this not received income is deferred. What that means is that it's not like they're never going to get it, but simply what's going to happen is that over time these companies are going to pay back the money that they owe to store capital, and that they will continue to receive that income. It's almost like a loan, like, hey, I know you didn't pay it for this month, we know it was a hard time, but we will allow you to pay it back over time. We won't just be like, no, you owe us it right now. And that does speak for store capital. It shows that they are just overall just good people. They're not just very snobby in the sense like, no, you owe me this money right now and I need it now, and if you don't give it to me, you're going to get out. No, they're understanding, and they understand that, look, this is a time that's hurt everybody. Not many people have benefited majorly from this except for some real big people, but it honestly does speak to me a little bit, because it's not at the end of the day, it's not just about the finances. It's not just about the dividends or the growth. It's overall, who are you investing in? All right? You're not only investing in a company, you're investing in the people who run it. And whenever you have wholehearted, good-hearted people who do things like that, it really makes me feel good knowing that my money's in the right place. Now, how that did affect store capital was that in May, their rent collection was down over 70%. Meaning they were only receiving 30% of their overall rent from the properties that they were running. This then caused store's stock price to fall over 60%. And although there has been a very amazing climb, they're still down over 24% for the year. And that, that says alone, buy. Like, just for me personally, this is not financial advice. That was my sign. Like, I got in about $18. They're about $28 now. But the fact that they're doing so well, and we'll get into that in a little while, how they've recovered. But the fact that they are doing so well and starting to get these businesses back open, and they are still down 24%, that's just absolutely phenomenal. I have no doubt in my mind that within the next 6 months, we will see them reach the levels that they were at before. I think they will recover that entire 24% within the next year for sure. And I am so excited as an investor. Like, man, that's almost, in my opinion, my honest opinion, as long as this whole thing doesn't just spiral out of control even more, that's almost guaranteed money. I have so much faith in this stock that I truly believe it's going to do phenomenal and reach back to those levels, and it's almost like easy money for me. But that's all my opinion, and that's all very hypothetical. But that is just another thing to note, that with it being down 24% over the year, it could be a very good time to buy. It is good to note that as an investor and a lot of financial analysts, they do believe that the worst of the worst is over for store capital based off of the recent numbers that they have been reporting about their businesses coming back online. It is good, it's pretty much pointing in the direction that the worst of the worst is past us, and from this point forward is going to be the green side. One way we can note this is that whenever it was down 70% in May, from that time period to now, it has grown all the way back up to receiving 88% of all rental income from its properties. That is an absolutely amazing statistic. The fact that they are only down 12% in rental income coming from the 70% that they were before shows that the businesses that they are, allowing to be a part of their property and a part of their portfolio, they're not slackers. They're not people who are just going to try to ride this thing out and collect stimulus. No, they're getting back open. They're trying to get their money, and they're trying to pay all their dues, and they're trying trying to pay their rent to store. And the fact that they are doing that and they are just strong companies overall, once again, is another key sign to me as an investor that this stock could be very, very safe and very, very promising as the future does progress. Now, one thing that could happen in the future that could very well help the store capital for sure is the fact that the government has still been discussing a new stimulus package. Now, if a stimulus package is put out, it could help a lot of businesses. And once again, if these businesses are helped out, that will then allow them to be able to have a little bit extra cash. And then if they do have that cash, they can start to pay their rent. And if they pay their rent, store capital does get that revenue. And then we all know that if when you own a REIT and the REIT starts to make a little bit more revenue, well, that does imply that the investor is going to make a little bit of extra cash. Now, the reason that it's a lot more clear for that is the fact that, like I mentioned earlier, REITs are mandated to pay out 90% of their total revenue to their investors. Now, the reason that that's important is because it's not like the company can just constantly keep growing and just keep their dividend the same. No, as that company keeps growing and their revenue goes from maybe 100 million to 200 million, they have to pay that increase out to their investors for whatever that percentage growth is. So that definitely does make me very happy in the sense that, hey, as y'all are starting to open, y'all are starting to make a little bit of extra cash in there. Y'all are going to continue to pay me out. I'll continue to reinvest those dividends. And maybe one day we'll start to see hundreds and hundreds of dollars comes in from dividends every single 3 months. Now, that is nice to know, that I'm glad I did remind myself. Store Capital does pay their dividend every 3 months, and the dividend rate is absolutely phenomenal. Store Capital is currently paying out a dividend ratio of 4.89, which is absolutely amazing. I know a lot of dividend investors look for about 2 to 3%, and they consider those to be safe. But the fact that Store Capital pays out 4 to almost 5%, and they have such all these good things going for them, and such a safe stock, in my opinion, makes them even more up there. Like, if they were an A before, they're an A+ now. The fact that they're not stingy with it. Look, we're gonna pay our investors out. We're gonna give them a high percentage, but we're gonna be able to pay that back because we have such good properties. Man, it's just an amazing feeling, and they are easily one of the best REITs out there without question. Now, with that being said, there are the negatives, and there are things to look out for. There aren't many negatives with this stock that is absolutely just kind of weird, because most stocks I can go kind of on and on about the things that could worry me. The only thing that does worry me about Store Capital is the fact that they're dependent on businesses. What I mean by that is that if, say this pandemic starts to just get really bad out of nowhere, as it does get cold maybe, businesses start to have to shut down. And if they go back into a life where businesses are closed down and they're not paying rent back to Store Capital, that could hurt them in the short term. I still believe that they have such a strong management team that in the long run, they will bounce back and they will start to do amazing things again. But in the short term, that could definitely be very negatively effective. And I wouldn't want to see them have to start potentially cutting their dividends down as these dividend dates come, simply for the fact that they're not collecting revenue. So it could be one thing to watch out for. I don't personally believe that's going to happen, but at this point, no one knows with 2020. It's been all over the place and we cannot expect anything. So with that being said, that will be it for Store Capital. As you do know, I don't like to go into the charts. I don't necessarily look at numbers as much. I do kind of just like to look at it in a broad sense. And so it is nice to note that if you are looking for someone who's just a little bit more broad, gives you ideas and gives you reasons as to why a stock isn't, appealing to me, I might be the guy for you. So if you want to go ahead and if you want to hit that subscribe button, I would really, really appreciate it. But I will see you guys tomorrow. Peace.